Hi all. So in this module, we are going to discuss about journal entries on expenses part, how we record the expenses in the books of fund, and how we even prepare journal entries. So we'll discuss that in details so that you can easily create the journal entries by following this module for a prepaid and accrued expenses and even direct expenses as well. So let's see how your journal entries works and how we record them in the books of accounts to record them in an appropriate way so that you can avoid errors, you can avoid mistakes easily. All right. So as I said in initially as well, so we always cross means see Geneva. It means let's assume it your accounting books of record, and we always refer the custodian or the other documents like expense schedule if you have or any documents if you have. You always refer those schedules to create entries in the books of account basically, and then we create entries. All right, we create entries and even we record them in the books of account. So this is how actually we follow and record them. So same way here we are going to discuss about it. So in this particular module and see how we prepare accounting entries. So let's say you have any due expenses. Any it means any. And when we talk about expenses, ultimately for you the expenses would be admin expenses, uh, audit expenses, then management fees, management management fees, admin expenses, audit expenses, management fees. Then it would be your incentive fees again, financial reporting expenses, miscellaneous expenses, other partnership or fund expenses, or ETC means all expenses, I would say, right? Any expenses, right? Any means any expenses. If the expenses are due to make a payment to the vendor, then those expenses you can record it as a payable, and make sure always we record expenses to the debit side. All right, always we record expenses to the debit side. And now we have expenses, so it means you can record in this way. If the expenses are due, expense account debit to payable account credit, right? On due date you can prepare accounting entry, so expense account debit to payable account credit. And when actually you can when you make a payment means that payable settled in cash, or actually when you make a payment of expenses, right? So that exposure or that, let's say, records you would check on bank account, and in that case your accounting entry would be payable account debit to cash account credit. See, same expenses when we have a due, when we have accrued, you can record it in this way: expense account debit to payable account credit. And same payable, when you actually process or when you actually settle them or process the payment, then your accounting entry would be payable account debit to cash account credit. See, always make sure one thing: payable we record it to the debit if we are returning or we are paying it out. All right. Then in case of prepaid expenses, so this was the context of accrued expenses. All expenses, just change the name. Let's say, for example, I'll take one example: admin fees. If you have a due admin fees, your accounting entry would be admin fees, admin expense account debit to payable account credit, and payable admin account debit to cash account credit. That's very simple. So this entry you can apply in case of all your expenses. Just apply it. Then in case of second, see, this one is the example of accruals expenses. This one is the case of prepaid expenses. In case of prepaid expenses, see, in case of due, you don't need to record it basically, but actually when when you process the payment of prepaid expenses, check the payment, and if you have processed them in advance, then your accounting entry would be prepaid expense account debit to cash account credit. So in that means prepaid expense account debit to cash account credit, and you can record them in the books of account as a prepaid expense and schedule that, set up the schedule. So every month or every day or every quarter or every year, depends on your schedule. So accordingly, what you can do, you can amortize it based on your that payment, whatever payment that you have recorded in the books of account. But yeah, in case of prepaid expenses, your accounting entry would be prepaid expense account debit to cash and bank account credit. So we'll discuss that about how schedule looks like and how we record the entries in details shortly. Then in case of, let's say, payable, but you have payable, but you have made a payment of those payable or extra payment, let's say you have processed it. So it means overpayment, overpayment, you have situation, overpayment. So in case of overpayment, you can record entry in this way. Expense account debit to payable account credit, right? But actually when fund manager process the payment, basically fund manager process payment a little bit higher, and that's what your accounting entry would be. Payable account debit, which is 1000, same. Then cash account credit, let's say 1200, because actually this amount which is gone out from your account. And finally you have prepaid expenses. Prepaid, it means remaining amount whatever that you have, right? So that you can update as a prepaid expenses. So assumption is you have made expenses or fund manager process expenses for a next accounting period. That's what we have recorded, this accounting expenses. All right. Yeah, so the third situation or fourth we have is underpayment of accrued expenses. Underpayment, it means due expenses was 1000, but process actually payment processed for 900. So see how you can adjust the difference. Let's say same accounting entry, you can process it, expense account debit to payable account credit. And in case of this, means when actually that payable settled in the bank account, your accounting entry would be payable account debit, cash account credit, and again payable account credit. So remaining portion you can update it as again payable. The reason is fund manager will reprocess payment for that particular portion in future. That's the assumption. All right. So this is how we prepare accounting entries and record them in the books of account as and when required. So I hope now you got the idea about how different scenarios that you would see in your day-to-day operations, and same you can apply it. I mean, same you can, maybe you would see questions around it in your interview process also, how we record them and how we actually book it. So yeah, so this is how we prepare accounting entries for expenses part. But in case of prepaid expenses, how schedule looks like, see this. When you actually process it, so that expenses always be recorded to the debit. All right. Expenses we always record it to the debit, and cash we actually record it to the credit when actually means cash goes out. And first time when you paid cash in advance, your accounting entry would be basically prepaid expense account debit to cash and bank account credit. But every quarter, every month, when you amortize it, means of course you would do this on your accounting date, right? So accounting date, your accounting entry would be amortize every month. See, depends on your quarter as well. So how you want to amortize depends on that. If it is monthly amortization, if it is quarterly amortization, or if it is yearly amortization. So see that. So as per the amortization schedule, what you can do, so just follow this and amortize it. Expense account debit to prepaid expense account credit. So every means month, day, or depends. So you can amortize expenses like this and record them in the books of account. All right. So this entry when you paid it, and this entry when you amortize it. Amortize is nothing but, guys, so basically prepaid expenses we are converting into expenses. That's what we record them in this way. All right. When assets convert into expenses, in that case we record accounting entry in this way. So the target is, see, this asset portion will make it zero at the end of that cycle, and that entire amount, it will be means total assets, it will be converted into expenses. So that's what you will see, this accounting entry, amortization entry, expense account debit to prepaid expense account credit, until your prepaid expenses amounts gets zero. So this is how we record entry in the books of account, and same schedule that you would see in your system as well. So systems like Geneva, systems like Investron, you can check the systems and record them in the books of account. All right. So in case of accrued expenses, how we record them? So see this, accrued expenses, it means whenever you have accrued expenses, that would be expenses always be recorded to the debit, and accrued expenses we treat as a liability. So that will record it to the credit side. So expense account debit to accrued expenses account credit, expense and liability. So every month you can accrue it fixed amount of portion, 100, and you can prepare accounting entry for the same. So when you actually accrue it, you can record the entry for that accrue portion. I'm assuming every month we are accruing for 100, so you can record it 100. But when you actually process that accrue expenses, process it means make a payment and transfer that payment or send that payment, right? So in that case, when you actually send it or process the payment, your accounting entry would be payable account debit to cash account credit. Same accrual account portion that you can process it, or whatever total expenses, if you want to process total expenses, you can process it. So basically, see, we have two different methods, which is reversal method also that we follow. Reversal, basically system reverse the entry for every month, so that you can process the entry for combined payment. For example, let's say in the month of April, if you have a, let's say, quarterly accounting, so you would see January, February month, 3 months, accruals, which goes around 300. So you can record 300 in the books of account at the end of the quarter. So this is how you can, record the entries, 300. All right. And if you see quarterly payment, then you can process them quarterly as well. So process it. 300 you can make the process, and once you make a process or payment, or process means payment the expenses, then your accounting entry will be payable account debit to cash account credit. All right, so there are the ways to record it. You can follow it and record them in the books of account as and when required. So let me know if you have any question around expenses part. But yeah, so these are the ways to record the expenses in the books of account. I'll share you the entries with you guys, so you can follow this and prepare your accounting records or record them in the books of accounts as well. So thank you very much for attending the session. We'll see you in next session on income part, and we'll discuss in details like how income entries that we process in the books of account. And if you like this video, please provide your rating and also provide your feedback as well, whether you